Welcome to Ask Me Anything. Ask us anything.
What's up, everybody?
Hey, how's everybody doing? Ask me anything. Get your questions over in the chat box. We're going to go around the horn, but we're here to answer all your questions. You got the Money Multiplier, BYOB, Money Mentor team in the house all across the country, ready to rock and roll. So get your questions in over the side. We can dive into anything infinite banking related, financials. But today I want to do it on a specific topic. Okay, so we got port strikes. We got port strikes happening all across the country. The ports are shutting down. We got war in the Middle East. We got supply chain issues still out. We got inflation still. We got all kinds of stuff out. So what I want to hear is who's prepping? Who has a stock pile of food in their back? I know Shauna told me she's got about a year's worth. She's stocking up on water and everything else, getting her well, start pumping again. You know, I maybe have to start looking at this, but I want to hear what you guys have to say. So
Nick Stockbridge is saying, did you guys watch Dave Ramsey's interview with Trump? I'm curious if Harris will do it too. Very interesting. Yeah.
I did not watch it, but I can guarantee you Harris does not do an interview since, how do I know that? She has not done an interview with anybody yet.
Yeah, I did hear Dave Ramsey talking about it, and Trump immediately said, yeah, we'll do it, but he hasn't heard anything back from Harris yet. But, you know, who knows? Who knows if she will.
I actually just saw a little short video, a little clip of it, and they were talking about energy and how energy is affecting all the prices of everything around here. And I saw like 30-second clip on it, but it intrigued me enough to now I actually do want to go watch it because it seems like Dave's questions were actually pretty good.
I actually didn't know it existed until right now reading that, so I will look into that.
I just found the full interview on YouTube. It's I already got 29,000 views. So
how long is it?
24 minutes and 51 seconds. I didn't know anything about it. I've tried to listen to Ramsey before, but every time I listen to him, I have to go like reset my energy and go to listen to something else because he said so many things that make no sense. Like literally listen to him tell someone, oh, no, you didn't. You don't have whole life. And like the guy had it for like 5 years, his regular old whole life. And by the end, he dropped it, got rid of it, and was going to get term. I'm like, isn't that illegal? Like if he was an agent, can't he like lose licenses saying stupid stuff like that? So I have a hard time like even wanting to be interested in that. So
Nick saying he wasn't his normal preachy. I did just see, do you guys know who Theo Vaughn is? He has an interview with Dave Ramsey actually, and that like came across on my YouTube app today. And I was like, I just saw the thumbnail. I didn't actually click on it, but I was like, I'll have to check into that.
I bet that's
Are you telling me
hilarious.
that Dave Ramsey's not on or Ask Me Anything? I thought he might be in the audience.
He should be.
Speaking of, Steven, are you going to his show on next Thursday? Did you figure that out? No. All right. So
we got too many people to see and too many people to talk to while we're there in Nashville. So we're not going to go mess with the Ramsey.
Okay. Good one. We have one question pending right now, so get your questions in. So Casual Credit Gaming is saying, hi, with the all-in-one first lien HELOC, use it to buy a primary residence. Do you have a separate escrow payment for taxes and home insurance, or is it paid from the HELOC like any other bill?
So when you switch to a HELOC and don't do a mortgage that you need the bank to pay your taxes and insurance, you're going to actually pay that once a year when it comes in. So you're going to have money in the HELOC. When it's time for your taxes, you're going to write a check for your taxes. When it's time for your home insurance, the home insurance and the cars should be bundled, A, to save you money, B, so you don't do it on a monthly basis to pay that service fee, and you only have to do it once a year. So you're going to pay it by yourself.
And what do you recommend we do with our deductibles, Joe? You sound like an auto commercial.
Put it back into the HELOC.
Well, should we have a low deductible or a high deductible?
A medium one.
With an umbrella. I went through this last week, actually, on this home that I'm moving to. So I have a small policy, IBC policy, that's going to be used for tax and insurance. Monthly money goes back into it. And then additionally, I actually changed all of my auto deductibles because I have that policy. It'll cover the deductibles. And so I'm saving just probably about $1,500 a year now just by changing deductibles and using that policy to cover that. So, yeah, it works.
Good deal. Yep.
Okay. Cosmic Eggburst is saying, I've got a second lien HELOC for IBC and Velocity banking purposes, but barely qualified with a 681 and looking for a better HELOC now that my score is 743. Who should I approach to buy it?
Why are we trying to get out of it? What is the interest rate? the interest rate doesn't matter when we're doing velocity banking. Why are we going to pay closing costs again?
I think they're talking about a second lien HELOC.
Yeah, so they've got a second lien HELOC
just
They don't
for
have a
IBC purposes, but they barely qualified. They're looking for a better HELOC now. So can you like refinance like a HELOC? Like put it all, I don't even know.
Yeah, you can get
Put
rid
it all
of one
back and then do it again?
HELOC and then get
Ooh.
another HELOC. But
11.6.
oh, that's a good. Well, yeah, that's a good way. Yeah, because we're at 8.1 right now for the first lien. What is your mortgage currently at?
Because Joe, I mean, could they look at a first lien HELOC instead of a second?
Yeah, now that they're in 743, we can just kill the first mortgage, wrap it all in together, and go up to 85% of the LTV.
Yeah.
Then you don't have to worry about amortization at all and just play with simple interest.
So how does someone go from having a second lien HELOC to getting another one? Just for me to understand.
Reapply.
Just like what I just did.
Yeah, just reapply.
I was over at Evans and I moved to Cornerstone. Cornerstone paid off Evans and increased my line by $350,000.
Cool.
Nice. Wow.
Oh, and then first mortgage is at 2.25%.
So what is that, Craig? Around 11?
He's
Yeah,
actually doing the math.
Because
I don't know.
three would be 12. So it's somewhere between 11 and 12, I would assume.
And some of that's going to depend kind of on usage too.
Yeah.
Right? So
How much money is left in the 2x4s?
why don't you?
How many years are left on the mortgage?
Yeah. So why don't you explain kind of what we're noodling around for those that don't know what we're talking about on the 2.25 to 11?
So on a 3% amortized mortgage for 30 years on a $100,000 dwelling, after 30 years, you will pay approximately $200,000 back to that bank. You would be at 12% simple interest on a apples to apples basis at 3% amortized. So therefore, we always switch into simple interest right from the get-go because amortization on a $1,000 bill would mean $200 to $300 going to the principal and $700 to $800 going towards the interest to the bank, spacing out the amount of time and money that you're paying the bank for using that vehicle. If we switched you to simple interest right away, therefore you're in control and it's done on a monthly basis of how much money actually goes into the pot on a monthly basis. So if you look at the calendar and there's four weeks, 7, 14, 21, 28. Say on the first week you get $1,000 from your paycheck, goes into the HELOC. On the 14th, another 1,000. On the 21st, another 1,000. Right then and there, you actually put in $3,000 to the principal of your mortgage. Now in the fourth week, on the 22nd, we pay the electric bill, the gas bill, your credit cards, the interest from the HELOC comes out. So that's like taking 3 steps forward, 1 step back. But what happens 2 days later on Friday? Another $1,000 hits again. So you were taking a step back, but only really took a half a step. So you took 3.5 steps forward within the month and paid over $3,000 to the principal of the house. So you're actually paying yourself instead of the bank. You're in control instead of the bank. What do we teach you? Be in control.
And a lot of this, someone who's just starting this cosmic egg burst, the first lien HELOC, is a lot of it's going to come down to how much are you earning per month? What are your expenses? What is that ratio? Because like Joe said, it's really everything going into the HELOC being a one-pot system, as he always talks about and clicks and pops at us. But it's how much are you making versus how much are your costs. And then like you can use a HELOC calculator to say, hey, it's going to take me 5 years at my current income. If I turn up the income filter, it'll take me 3 years. If it goes down, it's going to take longer. So there's variables, but you're in control of the variables, which is nice. It's just you're going to take ownership of all those things. It won't be a fixed thing anymore because it's going to move as your income goes up or down and other things. Right, Joe? So
that's correct.
So
not only that, but you're not going to, take, I can't pay my full payment this month of $5,000. I can only pay the interest of say 1,000. You're not going to take your own house away from you because you're in control.
interesting.
Can't
Oh,
foreclose on yourself.
I had never thought of that perspective, but I know, but I know for some people, like I'm just pointing out that it could be, it's really going to be down to the math of it. Like how consistent and disciplined are you to keep your costs fixed?
Mm-hmm.
So you're able to free up more capital as you're putting more money into the one pot system. And that more capital can go make you more money, which is what Joe's a fan of. That's what his experience and success have done this, paid off your house 5 or 6 times now, right? And it has the other component that if you're not as stable or maybe you have ebbs and flows, it still gives you the control that Joe talked about, but it might not be the perfect fit for you too. You got to really look into everything to make sure it makes sense. So
you can't once this happens, you have a lot of money. You can't go out and buy a motorcycle and a boat right away.
What? Damn it.
Got to put it to work. Put it to work.
It's got a new bike.
Yeah, there's a couple more HELOC questions rolling in, so we'll stay on the same topic, I think. But Dominic's saying, I have a second lien HELOC. I would like to switch it to a first lien while I have loans out. Do I have to wait to pay off the balance?
It's just a refi. So it's just like your traditional mortgage. You have still a balance. You just refi and everything gets moved over to the first lien HELOC.
It's a debt consolidation within everything that you have, up to 85% of the total LTV.
Cool. And Derek is saying first lien HELOC available for raw land or construction.
I do not believe so. I think there has to be a house on it because I had a client that was going through a construction loan. He needed to close out. Everything had to go to the last day. And then when they were ready to switch into the conventional mortgage, he was going to automatically switch into the first lien. So yes, needs a dwelling.
Okay. And then Navigate Your Venture says, how does the first lien HELOC get approved as a
Single
member LLC? Yeah.
It would go on your Schedule C of the amount of money of your gross income per year at a 45% debt to income ratio.
Wonderful. All right, last HELOC question, I think. Does First National do refi into first lien on an investment property? What are the ratios?
I don't know who First National is.
Well, First Savings.
First Savings Bank.
Oh, First Savings. Investment property, no. But I have a link to investment property now, and
Really?
I'm working on that now, trying to check them out.
Yeah,
Craig still has
CMG still does that, yeah. CMG Mortgage will do investment properties.
Will they do first lien and up to 80-90%?
They will do first lien. I don't know what the percentage is on them though, but they will do a first lien on a investment property.
Yeah, I just had a client do one. I forgot the ratio.
the one that I just got sent was a 70% on an investment. I have to dig into them a little bit more though.
Switching gears from HELOCs to insurance policies. So Nick Stockbridge said policy loans. So I know there are a couple types of loans that insurance companies offer. When would I use a participating loan versus a fixed loan?
I'm not sure I quite get that question because typically the insurance companies offer one type of loan, simple interest, but you can do a fixed one via a bank with your cash value as the collateral.
I think participating loans are part of IULs and how it treats the index. So whether you're taking the money out of those indexes or not, but we don't do IULs, so we don't have participating loans in whole life.
No.
I was excited about this question until we read part 2, and then I didn't know what the heck we were talking about.
Yeah.
I was like, wait, you have all these, and I was going to go through the 3 different options you have. I mean, you can take depending on the company, you can take like a max cash value loan, or you can take a specific amount. So you have options there, right? You have 3 different ways you can pay back the loan. I always ask people every day. Patty hears me say it a couple 100 times a week. Do the wealthy have more choices, right? Not a trick question, yes or no. Well, same with your loans. You can, if you have the money out working and say it's longer than 12 months, or you still have debts, then you can just pay the simple interest at the end of the year. That's one option. Another is if you have money coming in, or say you're in real estate and you're going to sell something and you're going to have this influx of cash, you can just put in big amounts or small amounts into the loan repayment, or you could set up structured, which is how the banks want all their loans. When they know when the money's coming, it's coming consistently, it's coming often, you can set up that way as well, which is how Chris sets up the majority of his loan repayments.
Yeah. The best
That's
answer.
how I personally do it. I do more the second option or the first option of interest or unstructured. But if you have more discipline, set it up the other way. Sorry, Fouts, go for it.
No, you're fine. That best their option is it's up to you. What makes the most sense to you as far as what kind of loan you want to structure for yourself?
But have a plan. Don't say it's my bank, I'm not paying myself back. I have a guy who's doing that right now, and it's not going so well for him. He's not paid his policy, and he's not paid the interest back, and he's overdrawn a loan somehow because they thought he had paid and he didn't. So make sure you have a plan. His business is not running successfully. Sorry.
I just put our calendar link in the chat too for anybody who doesn't have a policy yet and would like to get started with one of these people on the screen that you see here. So you go to mentors.beyourOwnbanker.com. Derek is saying, anyone know offhand when the next Texas event is? I don't think, I know we don't have any events in Texas, Derek, but I'm not sure if anybody else knows of anything. Or unless you're hinting and trying to tell us to come to Texas, then I heard you.
Derek, are you coming to Nashville?
He probably is. Yeah, I don't see anything in Texas the rest of the year.
Oh, let's go to Brian's question, kind of similar to what we were just talking about with the loans, is can you explain recognized and non-recognized policies?
Does he mean direct and non-direct, or
probably?
Yeah, I mean, pretty simple. I mean, direct recognition is when you borrow from your cash value and they reduce the amount of dividends you earn based upon the amount you took out, versus direct recognition is that way. Non-direct is the ones that we use, where when you borrow from the policies, you're still earning the same dividends on the same amount. So we prefer non-direct recognition companies.
And they're both good. I mean, there's not like the Nelson Nash Institute doesn't have a stance on either side, because basically, if you think of it from the life insurance point of view, right, in a non-direct, they know that it's a very stable loan because they have the cash, but it's illiquid, meaning they can't go out and make a spread on that money because that money's outside of the policy. And so they're giving the person that owns the policy the full amount of guaranteed interest and the dividends that are paid. Where in a direct, they're directly recognizing the loan because it's taken away from that portfolio that can earn. And then they're same thing. They're just giving you a percentage. So there's less variables. That's what Craig always says. He's like, I prefer not to do the math. So non-direct is better if you're going to be using a lot of policy loans, but they both work. So.
Okay. So Brian, actually, same person actually asked some questions earlier in the chat. So it was kind of nice that we went over that first though. But can you use a strategy to retire early? You can take out a loan at age 50 and use it to pay your living expenses. And because you are no longer working, your income is down, thus putting you into a lower tax bracket, and use the loans until you hit 59 and a half and start using other retirement accounts.
I will never be in a lower tax bracket because every year I plan on making more money and more money and more money. So that doesn't even.
But I think part of what Brian is asking is, I kind of call this that bridge. So you retire at 50, you need a bridge to get to 59 and a half. You need a bridge to get to your Social Security, whatever it is. Can the cash value in your policy be used as a bridge? Absolutely. And another thing we talk about is if you do have, say, retirement accounts, qualified retirement accounts that are in the market, one of the strategies you can do is when the market's down, the last thing you want to do is take more money out while you're down. So we call that a volatility buffer, and you use the cash value in the whole life policy instead of taking it out of your qualified account. And then when the account comes back up, you start taking it from there again. So you have some options of switching back and forth of which pile of money you want to be using at a specific point in time based on economic conditions, stock market, whatever it might be.
And if you were looking at this from Nelson Nash's standpoint, right, he didn't like to talk about retirement. So we're talking about retirement. He would talk about it as passive income. And so, like, if you do have that sum of money, you could go find ways, get more creative with your money. I'm just going to challenge your thinking, Brian. Go out and get more creative to actually have the interest being paid to you off the principal that you've created in some kind of lending deal, real estate deal, something that you know, like, and understand. And that way you're not drawing down. Like, we're going away from the accumulation theory. It doesn't work. It's broken. Like, who the hell knows how long you're going to live? You don't know. So how do you save up enough money to fit your lifestyle versus having the cash flow to fit your lifestyle today?
Yeah. And the last thing I'll mention on that one is I don't like the word retirement all that much, but if you want to focus on retirement, I look at it as multiple streams of income. Like the more you have, the more you can be free to do what you want when you want, which to me is really what people think of retirement is. It's being free to do what you want. That's not reducing your cash flow. It's actually increasing it via multiple streams of income. That's where infinite banking can really come into play, because what you're doing with your cash value, the concept, is really what can help you. So if you're just using it to live, that's one thing. But what if that money is going out there working for you and creating multiple streams of income? All of a sudden that changes the entire concept, but you have to change one thing first, and that's your mindset. Because the question there, this is not Brian, nice name by the way, not to criticize, but that's a traditional way of thinking. That question to me is a traditional way of thinking about money. And for infinite banking to really work for you, you've got to kind of switch that mindset a little bit, and then you'll start to really open up different avenues for you and different opportunities. So just kind of a quick little thing there.
Another answer to play on retirement, if you will, after 10 years in our policies, year 11, 99.9% of the time, we're at 200 to 300% cash on cash of what we're actually depositing. And that number keeps on going and growing every year. So that's another way to look at it compared to this question also.
And my only question is on the framing of it is, like say you retire early and you're no longer working, so your income is down. What does that do when it comes to time to premium? Like, when you have to make your annual or monthly or whatever premium and your income's down.
Yeah, there's a lot of variables inside of here. So are we talking about a newer policy, or are we talking about a policy that can sustain itself and just keep going? So there are some situations where it may not make sense just to start withdrawing or taking loans from the policy, and it may not make it all the way as far as you need it to go. But
yeah, because I think like what you were saying with the accumulation method, or the way you can do that from a retirement account is you can draw it out. That's sure. But the difference here with these policies is you have to give them life every year. You don't necessarily have to give your retirement accounts money every year.
Well, and like I said, it depends on where it is in that cycle. And if it's a mature policy, you might be able to start using it for income. Whether you're taking that cash value out to live on, or whether you're taking that cash value out and adding one more element of risk, that's perfectly fine too, to create more money. All of those things are legitimate paths to get there.
So Craig is saying it depends, which is our favorite answer on AMA.
Yes. A couple of shout outs here. So Navigate Your Ventures is saying, your team has given me the security to move on from my W-2 of 10 years and live off my investments. PMC is a game changer paired with IBC using whole life. All credits to your team. Last day was October 1st.
Awesome.
Congratulations. Just in time for quarter 4. Well done.
Dave is saying, hey guys, Trainer Dave here. Just got started with my BYOB policy and made my first deposit. Met with Jerome to get started with my infinite banking plan and wanted to let you know how pleased I am.
Wow, we need to invite all these people every week. Everybody send out links.
And then Dennis is talking to Jason next week.
Look, he's got a dinosaur. I like Dennis already. Let's go.
And Brett, I would love to
Brett.
hear Carson answer this question, but he hopped off. But next time, ask again next time Carson's on. I think he might have had a phone call, but it would be great to hear how Carson got started with the team.
I want to hear that story too, Brent. But for your son, because I know he's coming, he's 24, he's coming to the event in Nashville. The way Carson started is he started with a policy. He started practicing, and then from there, became learning how to do it, and then you can start teaching how to do it. So that was the first step. We'll hear the rest of Carson's story another time.
Yeah.
All right. So Damien is saying, afternoon, everyone from California. I'm currently in Mariner School. Just wanted to ask, do you think anyone who is in a union should be in this, considering these unions do more harm than good?
So in a union should be doing this. So are you referring to doing infinite banking? Because, my answer is going to be yes. And I come from the construction industry where unions are everywhere. My father-in-law right now, they're all union. My wife was union. So I will say 100% yes. I would recommend doing this.
So, I think he's got 2 policies already. So he's hoping to do policy number 3.
I was on the railroad for 20 years. That's a pretty big union.
Was it Union Pacific?
It was not CSX.
That's a question. Here's a question for you guys. Is there anyone, other than the mindset stuff, but is there anyone, if they can get their mindset around this, that should not be doing this?
No, everyone.
I mean, that's our belief. That's like to the core. That's why we're here, right? So that's when Carson had a call you're sharing with us earlier. You're just frustrated that someone came in with calculators and different things to prove how it's a terrible investment. It's like, yes, it is. It is not an investment. It is your foundation for everything you're going to finance in your life, right? But someone that came in just to prove, I'm like, Carson, I can't believe you lasted 40 minutes, but we care so much that he really tried to switch the paradigm. So
No, I love those calls.
I would have taken that call
yeah.
all day long.
I have no interest in that call ever whatsoever.
But I mean, the reason why I say this is because I come from the financial education background space, and so I love switching the mindset. That's just one of my things. But yeah,
And you can hear it in their voice. You can hear it in the voice when they change. I go, I gotcha. You got it now, don't you? And they're like, yeah. I'm like, exactly.
Now that's a
the
good
reason
deal.
why I do it.
Well, here's a 19-year-old who got it. So Zafina, I'm 19. I got an infinite banking policy the day I turned 18, and I'm currently putting in $3,300 a year. What advice do you guys have for me as far as utilization of my policy?
Well, that's a great question, but at first we'll start with what you're wanting to accomplish.
Yep.
Like, what's the goal? What's the outcome you want to? And then how does the policy help you accomplish that? So I recommend starting with the end result in mind, and then looking at how does the policy help you, because at your age, the policy is not the silver bullet per se, but it's one of the pieces that can help you accomplish your goals and outcome. But that's awesome. I mean, I wish to.
Can you imagine?
All the part to be that I had done this when I was that age.
Yeah, and I would say there's three main use cases. There's a lot of use cases, but there's three main ones. So I'd say if you have debt, well, that's a great way to use the policy to wipe out your debt. Do you have a car purchase coming up? If you have major purchases, using your policy to do that is a good use of your policy. And also investing. And I see that Navigate Your Ventures puts in there about the PMC. You know, as you build up and capitalize, you might get to a point where you want to get into private lending, if that's something you want to know, like, and understand. So some of that might just depend on where you are. Do you have debt? Do you have major purchases coming up? Do you have a big vacation coming up? You know, any of those types of things would all be applicable.
I have a simple, easy one.
First thing I thought of, I mean, I love the answers everyone's giving. It is really about the big vision and tying it back to the current. The first thing I thought is, how involved are you in your banking? Like, are you finding out, can you put additional paid up additions into the policy each year? Because then you could actually make this more efficient, grow more, have more capital, go out and do the things. And that way also it helps you, like Brian said, figure out what you're going to do. But I would suggest finding ways to use it, finding out how you can capitalize it to its max to really get the most out of it. And that'll help you really start understanding how to move the money. So
utilization inside the policy, if she's paying monthly, she should save up so then she can switch to annually, and then that would save the couple dollars per month inside the policy too.
So you're saying, Joe, that she should decide, if she can, or he, I'm not sure, can decide to pay their banking employees once a year versus 12 times a year.
Well, that would save their, depending on how they're doing it, yes.
But now
I love that Chris is here. Chris thought that Steven was shaming him into being late and not having a calendar when it was all about Hannah. But Chris, welcome to the show, buddy. Good to see you.
It's just a lot of scheduling issues today.
Hey, life happens. It's okay. I hope you didn't beat anybody up.
No, nobody got beat up yet.
Hey, Shauna, I put in the private chat. There's a link that happens to be the link that we're always looking for, where Chris did the volatility buffer conversation, all about retirement. I think that would be a really good segment for Brian Young to watch, because he's asking about some of the retirement strategies. So that's where we get in to talk about volatility buffers, covered assets, using whole life along with your retirement accounts. So Brian, if you watch that, I think that'll help give you a baseline of maybe some different things you might want to do with your retirement strategies.
Great. And then Brian, did you pin this one for me?
Yeah, because the follow-up, he said he makes about $5,000 a week selling insurance, which is very interesting. At only 20 years old, a lot of money sitting in the bank. So I mean, so you said you had a policy at $3,600 per year.
You're not at full utilization.
Yeah. So how about a second policy or something, a one that more is in alignment with your current cash flow? Might be an option.
And I like what Navigate Your Ventures is saying I would check out PMC and connect with a few people in the forum, start the connections now.
20 to 25% would be full utilization underneath the IRS guidance rule of your annual income, gross annual income.
Oh, look at all the
Which would
questions.
be like up
Jason,
to
this might
70K a year. So
And then Jason, this might be a nod to you, but I love the 10X question because it almost forces oneself to think outside the box to earn income, side hustles, PMC investing, learning more skills day by day.
I love that. I heard this the other day and it really stuck with me, and I keep repeating it. It's from Dan Sullivan, who's strategic coach, and he's part of the 10X, you know, what Benjamin Hardy wrote the last 3 books, but it's all based off of Dan Sullivan's work. And he said, as long, and he's in his 70s, and his mission's to write, I think, 100 books, right? But his thing was, as long as your future is always bigger than your past, you'll always be excited about your life. You'll never feel old because you always have a bigger future. That's one of the things that I have a problem with retirement.
Yeah.
As soon as our past becomes bigger than our future, what the hell are you living for? Really? Right. So I love that just simple switch right there. Like, hey, your future has to be bigger, like your dreams. I had my whole family sit down and watch a Jim Rohn video on Sunday, like a 24-minute video. And he just talked about how your dreams and your hopes have to be magnets to your present to pull you forward. Right. And they talked about faith and things like that. So it's all the same thing. It's just having that big future. So
yeah. I do that sometimes too, Jason, some of my trainings. It's like retirement is retiring from what you were doing into something bigger. Like that's the way I use retirement. It's not leaving this and then doing nothing. It's retiring into something bigger than what you were doing before.
And at times when we talk to people, we have so many conversations, and a lot of times I do ask probing, challenging questions because I want people to think, but I also, you're not going to shift what they've been doing for 20 or 25 years when they're just hoping to survive for another 10 years. It's like, really? Like I was there not that long ago where I had a guy come in and interview, and I was the top recruiter. I was doing Ironman all the time. And I was like, I just do my Ironman racing so I can get through my day-to-day job. And he's like, you might want to think about getting a different job. It's like, I'm number one in the company. I don't need another job. But he was 100% right. Like, why the hell would I keep doing that just to survive? Right.
Chris, I wanted to bring up this shout out. You missed it because you weren't on because you were late. Just kidding. But Navigate Your Venture said, your team has given me the security to move on from my W-2 of 10 years and live off my investments. PMC is a game changer paired with IBC, whole life insurance. All credits to your team. Last day was yesterday, October 1st.
That's freaking awesome. Congrats. Congratulations.
Yeah, I'm going to be like Chris. I can just show up at 5:14, just whenever.
Oh, goodness.
Nicholas Stockbridge is saying, have you guys seen the fixed rates of whole life drop or fluctuate?
7702. What year was that? 2022? I think it was 2022. The IRS put in place 7702. You can look up the IRS code. And what that did is that basically said insurance companies could lower their guaranteed interest rate, because forever, for as long as I remember, it was always a guaranteed interest of 4%. So after 7702, the insurance companies had the ability to set their own interest rates at whatever they wanted to set it at. Now, most of the insurance companies didn't come off of, where they were at much. So like most of the ones we're using are 3.25 or 3. I think our lowest is 2%. However, what they all did is they adjusted their dividend to make it so that their clients didn't have any fluctuation in the dividend crediting rate, which is the dividend crediting rate is the dividend plus the interest. So when you see a insurance company, declare or say our dividend crediting rate was 6.2, that's interest plus dividend. So there really has been no fall off. As a matter of fact, the fixed rate, the guaranteed rate did drop, but that was because of 7702, not anything else. It wasn't like the insurance companies just like, we're going to drop rates because they can. It's a contractual obligation. So any contract that was already in place prior to 7702, they're all 4%. Like all my old policies are 4%. Anything new is under the new reg, the new 7702, and that's anywhere from 2 to, I don't know what our highest one is. 3.
I think it's 3.75. I think 3.75 Security Mutual. Craig, no.
Guardians at 3.25, I believe.
Guardians 3.25.
Security Mutual is 3.75.
Well, America was 3.25 too.
I just don't remember what Security Mutual was. If anything, that one would be the highest. So not really.
But I think the question was, are we seeing those change? So since that 7702 change, I haven't seen any of those change. Everyone's kind of
no, because the dividend and the interest, the dividend crediting rate did not change. So nobody would have known any difference, going from then till now, except for in the way we design the policies.
Yeah, I think there was some talk when that was all going down, when everyone's changing from 4 to something, all the other companies were like, hey, what are you going to do? So Joe, what are you going to do? And so there was some suspicion that they were all going to eventually kind of come close together, but they've kind of stayed in those 2 to 3 range anyway. So,
and I would say, Nicholas, the one thing, if you're asking, is it guaranteed? Like, does it fluctuate once you're an owner? No, never. Like, once you're locked into the contract, it is that forever. Like, that does not ever change. So there's no fluctuation there.
Awesome. I did just want to bring attention to, so we've said a lot of really awesome things. Like, one, Navigate Your Ventures was able to retire out of their W-2 yesterday because of PMC. The way, Brian, you were just saying, graduating or retiring into something bigger and better. I want to bring up Private Money Club's Money Tank event is November 8th and 9th in Charlotte, North Carolina. You go to privatemoneyclub.com/moneytank. You can use code MCM, like Money Club Monday, for 10% off. And it's a really good place to meet people. There is even like an open mic at the end of each day where people in the room will talk about the opportunities that they have available. So Private Money Club, yes, you could go on there right now. You could talk to somebody to do an opportunity with them, over the internet for sure. But you could do that in person November 8th and 9th as well. So Bob McIntosh is asking me, if you had to choose a name to show up as caller ID for all numbers, would it be Money School, Chris Noggle, Be Your Own Banker, something else? I said Noggle Industries would be calling maybe, but I don't know if you guys have a...
I would just say BYOB.
All right, BYOB.
Then we can order booze.
Should be. I mean, we use Chris Noggle now just because that's more recognized and people, and it also flows back to all the social media channels. So I don't know, actually, now that I think about it.
We'll just say BYOB. That works. I mean, I bet someone would answer and be like, what the heck is this called?
bring your own beer.
Okay. Oh, David. Hi, David. Hi, Joe. Is it best to get a home equity line of credit or a home equity loan on the primary residence?
Line of credit is simple interest. Home equity loan is amortized. So we want to go with the line of credit because you're in control. The loan is amortization. They're in control.
Yeah, this is kind of interesting. Revolving line of credit. That's essentially what a HELOC is. Most people are not used to those things in traditional life. So it's called a revolving line of credit is essentially what that is. And so I didn't know this, Joe, when I first heard about Velocity Banking years ago, that you can use any kind of revolving line of credit for Velocity Banking.
Yeah. Anything that you have access to go in on Monday, take out on Tuesday, go in on Wednesday. Absolutely.
And 10 years ago, I got $80,000 of personal lines of credit in one day via 5 banks. And if I'd known about Velocity Banking, it would have changed my life. Didn't know about it, though.
I'm going on 15 years now.
I agree with you, Navigate Your Ventures. We've been telling them. We've been telling them and pushing them and poking them. He even showed me a video of himself, and I put it into one of the, remember, Joe? And I put captions underneath it. And you're like, oh, yeah. This is cool. This is cool.
That's so cool.
On, man. Let's go.
I'm working on it. I promise it'll happen.
He has one video that has CapCut, Navigate Your Ventures, and has the little narration and stuff. So
I showed Chris my 2 little videos when I went into Cornerstone and signed.
That's a step in the right direction. So Joe went his last HELOC. He did film it. He had a piece of paper. He's like, I'm signing this, and this, that, and the other thing. So it's coming.
All you gotta do is start talking. Hire someone with a camera. Get your daughter. Just have her start filming you, man. That's how you have to do it. Ask Chris. Right. How'd you create so much content? I just started doing it, right? And then you started doing it more and more and more. So just start.
Joe, Judy's saying, is there a calculator to compare HELOC versus the home loan?
Yeah, if you go on to bankrate.com, there's going to be a HELOC calculator. You can put in when you purchased the house and the interest, and it'll show you the amortization schedule, and then you can compare that to if you were to use a simple calculator with a HELOC, and then you can compare the both.
I use a website called dinkytown.net. You ever use that one, Joe?
No. What is it called?
Go to dinkytown.net. It has hundreds of financial calculators, and you can print out reports and everything.
Really?
It is amazing. It's one of the funniest name, but it's called dinkytown.net.
Dinkytown. Is it free? Is it an app?
Yeah. It's free website. Yeah, I used to purchase their calculators for my other business online, but yeah, you can run reports and I use them in real estate when I create loans and stuff. I use those as the schedule behind them.
DinkyTown.net.
.net, yeah.
.net.
It's a funny name, but it's a great site. They got a lot of stuff on there.
All right, cool.
There's a lot of stuff on Private Money Club too.
Brian is asking, in your experience, what was the largest percentage dividend you've seen on a whole life policy?
It would have been back in the early 2000s, or maybe it was mid 2000s. Gosh, I don't remember. Here, let's look this up. Now you got it going.
It's a good, curious question, but I also say, since we teach the process of banking, it's not all that. It's a good, curious question, not that relevant to our process we teach.
The Lafayette one, I thought, like 7.5 or 8% or something.
So I'm looking at the Lafayette dividend scale compared to the 10-year Treasury. And so back in, looks like in 1991, Lafayette was at 10% on their dividend scale. But the 10-year Treasury was at 8%. So there's a different picture back then.
Very much. I'm just Googling it. Highest dividend crediting rate. Oh,
I guess that's 1990. But.
Well, we're getting close to time here. I put the Money Tank information on the screen again. And then for anybody who's coming to Nashville, this is an ask from me specifically. I've been tasked I get to stand with a tripod and a little mic, and I'm going to ask you, how did infinite banking come into your life and what has it done for you and stuff like that. So at Nashville, please come up and see me so that when we're done, I can give Hannah and Chris these wonderful videos and I can remain the shining star that I am. So
I will be asking some of you on that same kind of formula. I'm gonna start a podcast next month and start launching it in January. So that'll be something additional where I've got a list of people. Corey, you know who you are. Other people listening, Derek, people who have applied what we teach and have had success. I want to know what it was like before infinite banking, what it's like since you've learned, and just, how you would want to spread that message to others.
So Sean, are you going to be walking around with a shirt that says press or press?
Maybe I should. Maybe I'll make something.
I like that.
You got to get some of us to stand in line so it looks like the place to be. Otherwise, everyone's just keep streaming by.
Well, I did buy these bright red cowboy boots, so look for those.
Nice.
95 Guardian was 8.5. Yeah, early 2000s they were 8, then 7. It was a decline all the way down from there. Mass Mutual used to be 9. If they were issued before 96, they were 9%. New York Life, a little lower at 8. Yeah, it looks like Mass Mutual was the reigning champ at 9% in 1995. That was the highest. And they're 6.2 now. The highest today, well, this is 2020, so I'm not going to have today. Looks like Penn Mutual. I think Penn Mutual 6.2 right now. They're 6.1 back when I'm looking at this chart. Mass is 6.2. Yep. So that's what you got.
And Sean, here I was thinking Chris was excited about your red boots.
What? What red boots?
No, I bought them.
You said I have red boots. You go, here we go. And I'm like, oh, he likes the red boots. And then you start naming dividend things. So.
Oh, yeah. Somebody asked what the highest dividend was, and I'm like, I don't know. I got to find that out.
Yeah.
We don't have any more questions right now, though, friends.
And Snaggy came back. Look at that. He looks happy, too.
I love this. On Private Money Club, like I go on here, and just look through, and there's just all the deals that are marked funded. That's just awesome to see. There's still so many deals getting funded.
And there's more, too, because people don't always mark.
Yeah, a lot of people don't even mark it. Yeah. A lot of, what I like too, there's a lot of really short-term deals. Like here's a 6-month deal. I don't know. A lot of opportunity on Private Money Club.
So Stephen, Jimmy Davidson's asking if you're all good over there in Florida. And Joe, I don't know if you want to let people know that your situation.
Yeah, I'll good on the East Coast of Florida.
I got kicked out of the hotel Wednesday at 5 p.m. Nowhere to go. Had called my wife, called her cousin, picked me up. I was canceled at the first airport in Clearwater. Then my second flight got canceled out of Tampa. Then the third flight had to go out of Orlando. And my Uber ride from Tampa to Orlando cost more than my plane ticket.
Wow.
But we made it out, and I was home in time for Ariana's homecoming. So
is that what they call surf pricing? Instead of surge pricing?
Surge.
The car is pretty much surfing through the water.
That's like an hour and a half ride or more, right? So that's not a cheap Uber ride.
Yeah, no.
Come to Cali.
I was thinking that too. I took like a $130 Uber ride in California to get to a mastermind. I was like, I should have rented a car.
Oh, yeah, mine was more.
All right, we did it. Another Ask Me Anything.
Good job, guys.
Good job.
A lot of good questions today.
Yeah, there were for the short while I came on. There was great questions. I was reading through them too. But all right, folks, thanks for joining us for another Ask Me Anything happy hour. Although none of us were enjoying happy hour.
No.
Change that. So we'll see all of you on the road somewhere, sometime, someday.